You don't have to do anything spectacular to invest like Warren Buffett. The simplicity of the Oracle of Omaha's investment approach actually surprises a lot of new investors. In a nutshell, Buffett buys outstanding companies that are now trading below their inherent worth, and he stays onto these assets for as long as the business continues to perform well. Obviously, there's more to it than just that. Hey, welcome to Stock Market Mate. In today's video, we'll dig a little deeper into investing in 2022 according to Warren Buffett. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, let's get right into it. Buffett's investment style gives a real-world example of how he implements his investment philosophy. We don't know exactly how Buffett performs his investment research because a large portion of it is confidential. However, he doesn't keep all his secrets to himself. Here's the 4-step Buffett approach that you can use before you venture into investing this year. Number 4. Understand the business. First of all, which stocks does Warren Buffett avoid? Buffett avoids investments that he doesn't understand. This is exactly why you won't find many high-growth technology companies or biotech stocks in Berkshire Hathaway's portfolio. We're not saying they have no potential or they're bad businesses, but Buffett knows where his stockpiling strengths lie. Buffett believes that one of the simplest ways to make an avoidable mistake is getting immersed in investments that are overly complex. Most of us have spent our whole careers working in no more than a handful of different industries. That being said, we probably have a very strong gist of how these particular markets work and who the best companies are in the area. However, the vast majority of publicly traded companies operate in sectors where we have little to no experience. But don't get us wrong, this doesn't mean that you should avoid making financial investments in these market segments. We're just saying that you should proceed with caution. Just remember that there are too many fish in the sea to get hung up on studying a company or business that is just too hard to understand. Number 3. Durability and competitive advantage. The famous investor believes the most important factor to pick a successful investment is judging the durability of a company's competitive advantage, or so-called moat. The most important thing is trying to find a business with a wide and long-lasting moat around it, protecting a terrific economic castle with an honest lord in charge of the castle, Buffett said. The multi-billionaire investor claimed that one type of competitive advantage is when a company is a low-cost producer due to economies of scale or a better business model. Buffett frequently used the example of Geico, a division of Berkshire Hathaway that sells auto insurance directly to consumers instead of going through neighborhood insurance agents. Because of its cost structure, the company is able to provide reduced prices. The second kind of competitive advantage is when a business has a well-known brand or franchise that customers are prepared to pay top dollar for. He cited Coca-Cola and See's Candies as 2 examples of companies with this kind of pricing power. Number 2. Integrity and talent. You're looking for 3 things, generally in a person, says Buffett. Intelligence, energy, and integrity. If they don't have the last one, don't even bother with the first 2. I tell them, everyone here has the intelligence and energy. You wouldn't be here otherwise. But the integrity is up to you. You aren't born with it, you can't learn it in school. Warren Buffett says integrity is the most important trait that any investor could have. He claims that when a person possesses integrity, investors can be certain of their sound judgment, dependability, and trustworthiness. Integrity-driven workers naturally advance into leadership roles and swiftly establish themselves as role models. Skills can be taught, but integrity solely depends on the person's mindset. As an investor, you may have valuable skills, but at the end of the day, you still need to protect your investments with integrity. Number 1. Margin of safety. Buffett's investment philosophy is founded on the idea that a margin of safety should come first. Margin of safety, put simply, is a feature of an investment that helps guard against investors losing money. For example, if a stock trades for $10 per share, but that company's assets are realistically worth $12 per share, then there's a $2 margin of safety. The asset's intrinsic value should keep the company's stock price from dropping too much. Always paying less than a company's intrinsic value is Buffett's objective. According to him, a too high purchase price for the stock of an excellent company can undo the effects of a subsequent decade of favorable business developments. There are very simple sets of ideas. And the reason why they get easily forgotten by most investors is that they're so, well, simple. Regardless of market conditions, you can always rely on these ideas, whether you're in 2022 or in the early 1990s. However, there are a few barriers to investments this year, and we're going to discuss Warren Buffett's advice for each of them. Here are 3 investing challenges for 2022 according to Buffett. Number 3. Overvalued stock market. There are an infinite number of reasons you might decide to invest in a certain company, but Berkshire Hathaway CEO Warren Buffett says there's one you should always avoid: buying a stock merely because you think it's going to increase in price. That's because even the best investors aren't able to predict how the market will perform. Instead, you should invest in companies that you both understand and believe will offer long-term value, according to Buffett. That said, any individual stock can over or underperform, and past returns do not predict future results. Beginner investors are encouraged to look into low-cost index funds instead, which are much less risky. Number 2. Inflation. Both novice and seasoned investors must navigate a volatile economic environment that is affected by inflation, conflict, and the pandemic. According to Buffett, we have no control over inflation. Families in the United States are currently coping with the rising costs of food, gas, and housing. In most cases, that means staying the course with your investing strategy. After all, as Buffett would advise, investing over the long term is typically the best way to beat inflation. Value investing can also be a solid strategy. Buy into a company because you want to own it, not because you want the stock to go up. Buffett told Forbes magazine in 1974. Assessing a company's value is a good strategy in choosing where and when to invest. Value investing is purchasing high-quality stocks, ideally at a discount, and keeping them for an extended period of time. There's also investing in line with your values, which involves considering your social, faith, environmental, or moral beliefs when you invest. Buffett has done pretty well for himself by following both strategies. Number 1. Fed interest hikes. The Federal Reserve has seemingly raised its benchmark overnight, by a full half point. This is the largest hike in 2 decades. In light of the Fed having now executed rate hikes at each of its last 2 meetings and expectations that there's more to come, we think it's safe to say that we are in a rising state environment. Only a few know how to play difficult market conditions, and nobody's better than the legendary investor Warren Buffett and his company Berkshire Hathaway. Here are 3 good Buffett stocks to invest in during a rising rate investment. Mastercard. As one of the largest payment rails in the world, Mastercard facilitates payment transactions in more than 200 countries. In 2021, Mastercard saw roughly $7.7 trillion flow through its network and had close to 2.6 billion cards in circulation. Because Mastercard sets the rules for its ubiquitous network and serves as a middleman in each transaction that goes through its network, the company collects a small percentage fee on each transaction. So if people are paying more for goods and services due to rising rate hikes or higher inflation, Mastercard would collect more for each transaction. Bank of America. Few banks will benefit as much from rising interest rates as Bank of America. The second largest bank by assets in the US Bank of America is extremely asset sensitive, meaning that when the Fed hikes rates, more of the yields on assets such as loans will reprice higher than the yields on liabilities such as deposits. This will benefit net interest income, the profits banks make on loans, securities, and cash after funding those assets. Berkshire Hathaway. The last item on our list is Berkshire Hathaway itself, which runs a range of businesses under the Berkshire brand in a variety of different sectors, including energy, insurance, and real estate. Berkshire also owns a range of diversified businesses that do not operate under its brands, such as the large insurance company Geico and the Burlington Northern Santa Fe Railway. In addition, Berkshire also manages an equities portfolio that is valued at more than $350 billion and invests in all sorts of stocks including tech companies, banks, energy, consumer food and groceries, and more. Berkshire can do well in a rising state environment because it has so much exposure to financials such as banks and insurances that naturally do better by investing cash at higher interest rates. Additionally, Berkshire's equities portfolio holds more than $106 billion of cash that will also earn more in a higher interest rate environment. Well, that's about everything. Hopefully, this guide, along with Warren Buffett's advice, will help you in your journey towards investing in 2022. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in our next video. If you enjoyed this video, you're going to want to watch one of these 2 videos right here. Enjoy!